Hi, this is Lex, and welcome to the Fintech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. Hi, everybody, and welcome to today's conversation. I am so excited to have with us Jared Ward, who is the founder and CEO of Twisp. Twisp helps engineers build cloud-native systems that underpin modern financial products, and we'll open that up as well as talk about embedded finance, the evolution of the market and the ecosystem, as well as the technology that's being used to actually connect all of this stuff at scale. Jared, welcome to the podcast.
Yeah, thanks for having me on. Glad to be here.
My pleasure. So let's start with the lens through which you view the world. What were some of your foundational experiences in education, in your career? What are kind of some of the experiences and motivations that you've had very early on?
I've always loved computers. I remember when we got my first computer when I was growing up, and I was hacking on JavaScript, playing with web browsers, building web pages, etc. That love for computer just stuck with me since then. And I studied computer science at University of Washington up in Seattle. And, really what I started to learn going to school is I want to be out solving problems. I want to be out helping companies and people use computers to solve problems. And I moved down here to Portland after I was at school and started on energy trading systems. I worked for a company called Pacificor. They're a big power utility, and I worked on the energy trading floor and helped build a lot of the systems that traders use to trade energy on the market. I also did a little bit of optimization modeling, which is a really geeky way of saying that we essentially planned how we were going to generate energy on the power grid, optimizing for price, and really mathy, geeky, huge partial differential equations that take 24 hours to solve. And I had a lot of fun working on those problems. And that was kind of my first taste of what does it mean to start to track money at scale.
Before we get to simple, I want to think about some of the words that you used. So were you able to see the ways in which that computers and automation was helping people in finance solve their problems? Because I think in each one of those, there's probably a bit of meaning. There's actually quite a lot of difference between building out a really strong optimization calculator for some particular trade versus having some underpinning system that allows people to see information versus having, a cloud infrastructure on which all these systems live. Like in the early experiences that you had, did you see the types of solutions, or how did you look at the way that computers were being applied to financial services?
Yeah, so for in the energy trading scenario and that optimization modeling I was talking about, it was a little bit lower level than that. So when you operate at a power utility, quite often in public utility districts, you're required to optimize on price. So you're supposed to essentially deliver ratepayers the best price that they can get for their energy. So the optimization model I'm talking about here on those energy trading systems directly affected end customers. It was really how cheaply can we deliver this energy and what can we do to deliver the energy cheaply. So the optimization modeling, the results of those models were actually directly impacting customers who are paying for their electricity. An example, the optimization model runs and at the end it says, hey, we're going to spill water or we're going to generate power from this dam for this set of the day. They're then going to switch over to gas burned power. We have all the historical data of trends of how much electricity is going to be using, what are the weather forecasts that are coming up. And really what you're attempting to do with that optimization modeling system is figure out what is the cheapest way we can generate this energy and get it back to our ratepayers. So really, when we think about the direct impact of the customers there, we're thinking very much around how can we provide this power at the cheapest price possible. Now, when you think about the underlying systems that actually power this, Pacificor had a data center on the fifth floor, right above the floor I was working on. So this was a pre-cloud. This was 2006 timeframe. So we were dealing with a lot of Oracle, a lot of VAX VMS, and all these kind of interesting old mainframe systems. And there's a ton of data to work with. When you think about the power grid operating, you have tons of meters and monitoring, and you know exactly where the energy is being produced and how it's being used. And one of the most interesting things about the power grid is there's a system called e-tagging. And e-tagging is how a lot of these organizations account for the actual energy. So if you think about a power line itself, there's electrons flowing over it, and that's electricity that end ratepayers are using. And there's really no way to take a large transmission line and be able to say how much of this energy that's flowing over this transmission line is being, how do we account for where it's actually going for? And it's all a big numbers problem that people do. So these e-tagging is essentially a way for you to account for every unit of energy that is flowing over the line, and all power utilities do this. And there are massive systems, e-tagging systems, that are essentially doing accounting for the energy that's flowing over. And there's a lot of really interesting underlying technology that enables that.
I wanted to pull out this point that you talked about, which is there's a tech stack, layers of technologies that are combined to make this work, and different parts of the tech stack evolve at different speeds. And then the other point that I think is really interesting is that you've got, I'm sure it's not true that it's just one, but it sounds like you've got this one variable, which is lowest price, around which all of this very sophisticated math is swirling, over some time period and so on. You have a win condition. Now, going to your next role at Simple, tell us about Simple. And then did Simple have a win condition? Or in the B2C consumer neobank game market kind of solution set, is there a similar one thing that you think is or was highest priority?
Yeah, well, if we take a step back in history and think about like why I joined Simple, the entire premise of the underlying idea was banking that doesn't suck. When we think about how we traditionally engaged with banks pre kind of the mobile applications, the internet, the web, et cetera, you had a branch that you went in and dealt with. If you wanted your balance, you went to an ATM. There was a lot of friction that seemed at odds with the way that technology was moving. So Simple for me was a really fascinating and interesting idea of, okay, how can we take some of these services that traditional banks provide and bring them up to date with the 21st century and do it in a way where we care about our customers' financial health. We care about how they manage and their finances. And we want to be able to provide tools and leverage technology to be able to help them have a healthier financial situation. So really, if I would say that one premise there is, what does it mean to have a bank that truly serves its customers and acts in the best interest of their customers?
One of the challenges I've always had, having spent a bunch of time in B2C fintech, is this best financial life for the customer, right? Because you could anchor everything on be the best bank, whatever that means, be kind, be a fiduciary, put your client's interests first. And then you step into what is the most sort of fulfilled can someone be financially? What is their best outcome given all of the other constraints and so on? And that becomes an impossible problem because people are so different at scale. But on the other hand, maybe they're not. Maybe they do just want a cleaner experience and simplicity. And Simple, of course, was one of the pioneers of neobanking. Can you talk about your work there and what kinds of things you discovered?
Yeah, so thinking about that overarching goal that I just discussed, what does it mean to improve the financial lives of our customers? That's a product question, obviously. Now, when we think about what does it mean to actually transition some of these old banking systems and banking technology over to these modern tech stacks, I think that's where my primary focus was in the beginning at Simple. How do we take the cloud and run a banking service on it? If we are running a banking service in the cloud, what does it mean to make it through audits and have all the strong compliance and regulatory pieces in place so we can answer those questions? You have to start thinking about, I have a traditional bank that maybe I'm going to be partnering with, and we had a number of them at Simple. What does it mean to take these systems and actually hook it up to traditional banking and put this modern facade on top of it that people can actually access their banking information through the phone? Now, the journey of making that happen was arduous. We had a partner at the time who was helping us do our card processing, a company called TXVia. And TXVia was interesting because we built our entire card stack for processing card swipes essentially on top of it. And Google Wallet ended up buying that product and gave us a very short timeline around, hey, we're going to shut this down. You guys can no longer use it. So, that left the company scrambling. How are we going to migrate off these stacks? And keep in mind, there weren't any SaaS players at the time that we could go out and say, hey, here's a problem that we have. Do you have a service that can help us with it? We were greenfield implementing all of this. So, really my journey there in the beginning was building nearly every part of that financial stack that we need. So greenfield core ledgers, direct integrations to card processors and the card networks for card issuing, all the security and APIs on top of that, launching mobile apps. How do we keep all this data secure? So it was really kind of a rethinking of how all of this technology had been built before and trying to pull it kicking and screaming into the 21st century.
Yeah. So actually, if you'll spoil me an answer to this question around what you described, I would love to get a sense of, like, you're coming in and you're looking at the architecture of traditional banking, right? So there's probably some sort of FIS or Fiserv plugged in, and then there's probably some other proprietary systems that have grown around it and so on. And then thinking de novo about architecture on the digital side. And, there's, I'm sure, a distinction between, we need a mobile experience to replace the branch experience, but then we need a replacement for the core banking bit, or maybe we don't, maybe we integrate something. Can you talk about this kind of comparison of the stack of a traditional bank in the US versus sort of what you had decided to chew on and put together?
At the fundamental level, we wanted to build this thing in the cloud. We wanted to use some modern, what we call service-oriented architecture, where we have an engineering team and different parts of the team are responsible for different services that are purpose-built to do specific things. So maybe a card processing service or a core ledger service or an ACH processing service. And we think about this modern architecture as just like kind of a constellation of services that are running that are all interoperating with each other and allowing us to deliver that service, for lack of a better term, a cloud-oriented fashion. Now, if you take a step back and think about how are a lot of these traditional financial institutions running, they will have a core that they're running on top of a Fiserv or whatever core processing system they have. And really the biggest pain point that we encountered with these systems is they're large monolithic applications, meaning maybe they're running on a mainframe, an IBM mainframe, and there's a DB2 database that's underlying it. And there are all these really sophisticated processes that are running on top of that underlying infrastructure. And when you go into an org like this at that time and you say, hey, we need an API, so we can actually have a programming interface that we can start to write code where our programs can begin to talk to your programs. APIs, the banking partners that we have, APIs were not a thing, meaning there was not a clear way to have our system call that internal large core banking system that they had. And really where we had to start in the beginning is really starting at the fundamentals and working directly with some of these banking providers to be like, okay, what is the best way for us to get data into and out of that system? And starting at that square run of like, how do we start to put some APIs so these banking services become available? And that's sort of where my career went at BBVA after we were acquired, which we can talk about a little bit. What does it mean to put an API on top of these cores to make them so fintech organizations can be serviced by them? But really, it was we have a core system, and what does it mean to even expose that thing to the outside world? And banks are truly risk averse. So you can imagine the uphill battles of what it meant to try and get an API that we could push or pull data out of these systems with.
Let's talk about that, right? Because Simple was very early to market, and I've covered this in other conversations. And there's been a lot of innovation that kind of followed what Simple did. But it was acquired by BBVA, which is I'll use the word fantastic because I think BBVA tries to do a lot and is quite visionary around technology. A fantastic bank in Europe. And the European context is such that whereas in the US, you have to really break into your own bank to get your data. You have to, screen scrape the information out, get your username, password into Yodlee or Plaid or whatever it is. In Europe, there's a lot of pressure around open banking, meaning banking that where the incumbents are forced by regulation being PSD2, to make at least read access, if not read and write access around money, available to other industry participants. And it created this pressure to move a lot faster and do things like acquire technology companies. So I wanted to give that context. And with that, you arrive at BBVA and what is it that you see?
Yeah, so where BBVA started for me is when the acquisition happened, we had a mandate to essentially migrate all of our underlying systems at Simple over to the BBVA. So they're essentially holding the money and processing card payments. So a lift and shift. What does it mean to take an entire running system, lift it, and shift it onto an entirely new banking provider? And that's where the basis of BBVA Open Platform, which is their banking as a service API, really shook out from. I remember having weekly meetings with the BBVA team, their technology team, their risk team, et cetera, thinking about how is BBVA going to expose this underlying core system that they have for Simple to be able to use and operate the bank on top of. And keep in mind, we're looking at this from a very modern perspective of how do we surface everything via APIs? How do you actually build and operate a system on top of these APIs? So we probably spent the first year and a half on that integration, just working directly with them to design how is this even going to work? How are we going to take this mainframe banking core and make it available for an organization like Simple to use to operate their neobank on top of? So, as we were going through that process of designing and building, it started to come into light that, hey, maybe what we can do here is these APIs that we're building, these banking as a service APIs, could be turned into a product that other organizations could use. And really, as we were going through this process of designing, that started to become something that we're thinking about. What does it mean to not tightly couple Simple to BBVA, meaning that maybe there's not assumptions in code that Simple is the only customer that's working on this? And that's really where open platform started to take shape. How do we build APIs on top of this banking core that not only Simple can integrate with, but other financial service organizations that want to be building on top of it as well?
Did you feel that the market was ready to consume infrastructure in this way? Like, did you encounter demand for it? And if yes, what were the technological capabilities of those counterparties? Like, did they appreciate a well-designed API? Did they know how to use it and plug it into their own infrastructure?
Yeah, I mean, so frankly, when these organizations, fintech organizations, are coming to a banking as a service provider, really the table stake that they're looking for is, hey, we need to hold funds. We need to move money. Maybe we're doing payments. Maybe we're doing some innovative financial product. And I need access to the financial system. So I would say from the demand perspective, really what most customers are coming in with is, hey, I have a product idea or a company idea. It involves money. I need to hold funds. I need to move money. Maybe I'm going to have some FBO accounts that are going to be powering a balance that I'm going to be showing inside of my application. And I need access to the financial system. Now, secondarily, are the actual APIs and the underlying technology, which I believe is very important to get right. But I would say from the demand perspective, really what people are looking for in that particular scenario with banking as a service was being able to go through that process of getting access to the financial system and actually be able to provide financial services to their end customer. And there was plenty of demand. One of the interesting things that I felt like was one of the biggest hurdles that we put up was making it through the risk and controls department at the bank. The due diligence was pretty onerous. The bank is in the end responsible for what that fintech organization is doing. So there's a balancing act that you have to go through and that balancing act is how much risk is the organization that's using the API going to take on? How much risk is the bank going to take on? And how do you make it really clear who needs to have controls in place and how those controls are in place? Because in the end, like I said, that bank is responsible. So there's a lot of complexity of thinking about, how do we safely allow people to integrate with these APIs?
We're seeing now in the embedded finance space, some of the banking as a service providers actually struggling because their quote unquote underwriting of all sorts of fintech footprints is not looking good in a down market where these fintech distributors are not doing a good job with their own customers. And so we're starting to see at the edges some of these partnerships fall apart. I want to ask you one last question on BBVA before moving to Twisp. And that question's around sort of like this visual of scotch taping together a lot of old infrastructure and then modern API-based real-time infrastructure on top. Is that the right answer? Is that where the industry is going to solve to? Or do you think that everything's got to be written from scratch and there's no way around that? Like, what were some of the operating conclusions from having tried to combine the different stacks?
Yeah, so I mean, these systems have a ton of mass and gravity, the core mainframe systems that a lot of these banks are running. Quite often these systems are 30 years old. And we're talking tens of millions of lines of code. A lot of time and energy and effort went into building these things. And in a wholesale replacement of a system like that is almost always doomed to fail. When we think about what would it mean to completely rewrite a banking core, you're talking about a ton of person hours of energy to be able to put into it to make that operate and get all those nuances, all those little bug fixes that maybe an engineer said, oh, this corner case, there's something wrong here, and we have to write a little bit of code to handle this particular corner case. There's all kinds of intricate knowledge embedded inside of those systems. And for better or for worse, a lot of these systems, I don't want to say they're messy, but they're complicated. There's a lot going on inside of them. So when we talk about wholesale replacement for a bank that is mostly interested in, holding funds and all of the banking things that they do underneath the covers, there's not a whole lot of interest saying, let's wholesale rewrite this thing. Now, I will say there's one trend that is happening that is kind of acting as somewhat of a forcing function to essentially modernize these systems, and that's the cloud. When we think about cloud modernization, it's a buzzword that almost all of these banks are actually thinking about and have projects on the books of what does it mean to go through this cloud modernization process? How do we replace that data center that's on the fifth floor that we're spending all of this expenditures on? So I would say cloud modernization is we're starting to see more and more of these services migrate and move their systems into the cloud, but we're not seeing wholesale rewrites of them. I think this journey of modernizing banking infrastructure is going to be something that happens slowly, and it's going to be something that happens piecemeal. Now, we may find a silver bullet at some point. There's a few players out there that are working on modernizing that core banking, and we're seeing some large banks adopt those solutions. But, there's a lot of assets there that have to be rewritten and rebuilt. It's my opinion that we're going to see that happen slowly over time, and it's going to be a chipping away at these financial services.
There are a couple of cloud-first companies like ThoughtWorks and so on, but it is a gigantic undertaking. So let's transition to Twisp, coming out of BBVA and having these conclusions about what is and isn't possible at the infrastructure level. What were the takeaways that led you to found the company, and what are the core propositions that you've built out?
Yeah, so when I think about my career starting at Simple in Fintech all the way up through that BBVA, there's a progression that I found every eng team that I was working on taking. We would start with a product idea. Hey, maybe we want to show a safe to spend balance, which keeps track of pending balances, maybe future encumbrance balances that we have. And we're going to show the customer this number that we believe is useful. Here's what you have that's safe to spend based on your upcoming rent payments or based on any financial obligations that you have. The question that you ask yourself when you're building this system is, how do I start to design the underlying data storage so I can actually track this financial data and do it in a very correct and reliable way? It's extremely important when you're working with money that numbers are always right. And frankly, that's a table stake. If my bank account balance is wrong, that's a huge violation of trust. So when we started in the beginning there, one of the first systems that we built was that envelope budgeting system to serve the safe to spend number on top of a relational database. We were using Postgres at the time. And where that started is something we call an ad hoc accounting system. It was us thinking about, okay, we can put a number here, and when a transaction occurs, we're going to keep track of this number right here. And when the transaction updates, we're going to start updating these numbers. And what we quickly found in some of those first iterations of it that engineering teams were working on was we started to see that numbers would drift. And that is a huge problem. And that number drifting, where maybe a balance is off by 3 cents or a balance is off by 7 cents or something like that, that's an indicator that there's some correctness issue in that underlying system. And usually the heart of where that problem came from is when we first started thinking about building this financial product, we didn't actually think about it from the perspective of a ledger. And really that journey through Simple, what we started to see is, okay, we need to treat this as a ledgering problem. And a ledger is a very simple concept. It's a journal where you can write transactions, a set of accounts, and a way to post entries and transactions into that journal, which essentially sum up to a balance. So what we started seeing is, hey, to actually do these numbers correctly, we need to structure the underlying core system as a quote unquote proper ledger. Now, the interesting thing that we started to see is as we started to get these core ledger systems in place, the correctness of the numbers were better, the observability around the numbers were better, and we really had an abstraction that we could use that helped us really think about how do we keep track of transactions and balances. So there was this arc of a journey of, okay, we really need to start thinking about this as a ledger. Now, as I moved up into BBVA and we started servicing customers, I started hearing these problems occurring at customer systems as well. Hey, we had an engineering team. Not many of the engineers had an accounting background. We started with an ad hoc accounting system, and now we're encountering some problems with it, and we're going to go through and we need to rewrite it. We need to think about how to rewrite that underlying system because we want to engineer our way out of these problems. So where Twisp started to shake out is I started seeing teams over and over implementing these core table stake ledger systems, which frankly look extremely similar across all organizations. The principles of accounting are pretty easy to wrap your mind around, but actually doing it correctly and spending the time and energy to get that core table stake of the system that's going to be the beating heart of what you're doing doesn't really affect the end customer because they expect these numbers to be correct. That is the core expectation. So Twisp really shook out from how can we provide a core ledger that these engineering teams can use and build and have all the correct abstractions in them so they can start working at a slightly higher level on their product?
Really interesting how these things get exposed the more you kind of dig into them. And what kind of adoption have you seen? Like, has there been any drift between your thesis and what you're seeing happen?
Yeah, so I mean, an interesting thing is we've seen some unexpected use cases, and in hindsight, I don't think they should have been unexpected, but they sort of were for us. And one of the first ones was around brokerage systems. What does it look like to keep track of securities and options and buying some of these things on the open market and all of the accounting that occurs inside of that? Those are very complex accounting systems where you have trades that are open, trades are settling, trades are closing. They might not open, they might not close, and there's this process of like, how do I keep track of these massive amounts of data? And I think that has been one interesting use case that kind of took me by surprise, is folks coming in and saying, hey, I have this problem. It's not actually currency. It's not US dollars or euros or whatever, but it's actually a security. And these concepts of a ledger really apply to helping them solve this problem. So I think that's been an interesting thing for me, is starting to see people are interested in the correctness of these underlying systems. They're interested in getting it right. They're interested in having that financial observability, and they're interested in tools that can scale as well. That's been one other thing that's been interesting to me, is there are some organizations that have massive scale core ledger systems. They start to hit performance issues. Hey, maybe we're running on MySQL and now we're thinking about building sharded clusters. These complex engineering problems. And when we think about Twisp as a solution, if you can come in with an answer to correctness at scale with a clear way of how it's priced, you can start to really help these engineering teams start to level up their underlying systems.
There are two things in what you said that kind of caught my attention that I'd love to get a little bit of clarification. So you've talked about kind of brokerage versus banking. And in my experience, trying to build into the logic of a portfolio management system or, some custodians' accounting standards is very, very different from the banking approach to balances and so on. And it is kind of determined by the peculiarities of those industries. I guess one observation there would be actually that the underlying data sets for those different industries, one for brokerage, one for deposits, yet a different one for probably underwriting and lending, yet a different one for insurance. Those were purpose-built solutions within these regulated industries. When I think of blockchain-based ledgers, it's almost the opposite, where people are forced to adapt their industry or the logic of their industry to a much harder ledger that they can't change. But anyway, going back to kind of the main point is, how do you abstract enough to make sense of assets of different type?
When we think about what a core ledger does, and I'll talk a little bit about how Twisp thinks about this problem, but we are obsessed with getting those abstractions right. Now, the abstractions that are presented inside of Twisp are going to be quite familiar to, like I said, the concept of a journal, where we write transaction entries into it, the concept of accounts, the concept of account sets, which allows us to group accounts together and roll up and do aggregate balances on top of accounts, the concept of tran codes, where a tran code is when this particular type of event happens in our system, whether it's a trade or a card swipe or some sort of banking transaction, how do we post transactions to or entries to the underlying system to do double entry accounting and keep track of this. So Twisp is very focused on how do we hide some of these accounting principles and that low level of double entry and being able to post entries based on certain types of transactions. Maybe I have an offset account or a fee account, or maybe I have a third party where I'm actually pulling in ledger information from them. How do we start to hide some of those accounting abstractions from the line engineers who are actually building these? So let me give an example. maybe I'm processing an ACH transaction, and an ACH transaction in the US has an interesting life cycle. You send the request out to the Federal Reserve then routes it on to the bank that it's going to be going to. The bank processes that. You wait for the absence of a return to actually be able to settle that transaction. And there's a lot of interesting companies that are figuring out how do we solve some of that risk that's involved there, where money is in flight, but we're not 100% certain that it's been available yet. And right now, or in the past, what we've seen is 3-day waits. That's why ACH has a 3-day wait, because you're not waiting for confirmation. You're waiting for essentially the absence of a return. So when we think about actually structuring that and modeling it inside of the core ledger system, we have to think about, okay, maybe the state of this money right now is pending. Maybe it's encumbered because I've done a future transaction. At some point, that's going to settle. So that actual ACH transaction that's occurring may have 10 or 15 entries that need to be written to the ledger that's accounting for, okay, it's in a pending state. We need to reverse that pending state and post it into the settled state. Maybe it got returned and we're doing that. So there's a lot of complex accounting that is occurring to keep track of these underlying numbers and give a representable balance that is actual reality. Now, when you think about that process of structuring that underlying accounting system, we don't necessarily want the engineers who are building my mobile app or maybe the API services to have to think about all those nitty-gritty details of the underlying financial system. So one of the key things that we try to think about in Twisp is, how can we hide some of these details behind an abstraction so it makes it really easy to integrate with? Maybe we're giving the financial team a little bit more control of our chart of accounts and how we post these. So it's really, how do we make the jobs of the engineers, how do we level them up and give them the confidence that we're doing these numbers correctly? Additionally, beyond just kind of trying to hide some of those abstractions of how you do that accounting properly, we also are thinking about that cloud modernization that I talked about. One of the most beautiful things that we have in the cloud right now is it's very easy for me to spin up compute resources. It's very easy for me to spin up managed databases and that sort of thing. And the big gap that we were seeing is, hey, don't we believe that a core ledger, this set of abstractions that we use to keep track of money and the APIs for that, we should be able to spin those up just as easy as we spin up some of these managed databases. So that's a core tenet is, what does it mean to be cloud native? Inside of Twisp, we make that very easy to provision a new ledger and journals and that sort of thing. It feels almost like it's built into the native cloud. And we actually price our product a little bit closer to a database than we do a traditional financial service. So it really is this component of the system that engineering teams are building their applications on top of. And we want to give them that really fast accelerant to know that they have that correct and safe underlying core ledger that they can depend on, that's hiding some of those abstractions of the accounting from the engineers that are building those systems, and help them build more reliable and scalable systems a lot easier than they could before.
You mentioned databases like MySQL or Postgres kind of breaking or not being able to scale up. And I'd love to hear what is available now that wasn't available then. Like for you to be able to credibly say like, hey, we can take on anyone from a small startup to a large financial institution, like you really have to be able to scale up that database infrastructure. Can you talk about like what are the natural limits of those technologies? And then what are the ways that modern stacks are able to get around those limits?
When we think about a traditional database, relational database like Postgres or MySQL, they are monolithic applications, meaning these databases typically run on one piece of hardware, a single server. Maybe you have replication where you're making copies of that you can read against. But essentially, you're looking at a vertical scaling issue. How many CPUs, how much memory can I throw at this problem? And obviously, as you increase the CPU and memory of an underlying database, it's going to be able to support more throughput and have higher performance. But there's a limit to that. Servers only get so big. And when you get to the point where you can no longer scale that single machine up, or that single database, you start to look at this process of how do I horizontally scale, which means rather than making the underlying compute resources larger, how do I start to create horizontal so I can just create more instances of that compute and be able to scale out horizontally just by adding new machines or something like that. Now, traditionally, what that was called, the buzzword that they used for them was NoSQL databases. And NoSQL databases were built and designed to support this horizontal scale up to just about any size. A lot of the big tech orgs were thinking about how do we build these database systems where we can just keep throwing more horizontal hardware at the problem and the system will continue to scale with that. Now, there are trade-offs that you have to make when you start to structure your database into a distributed database, meaning a cluster of nodes that are attempting to work together. Some organizations use sharding on top of MySQL. So they have different MySQL instances and maybe some application logic inside their application that chooses which instance to use, et cetera, et cetera. But now what starts to happen when you build a ledger system on top of a distributed database is this distributed database has made some trade-offs to be able to scale in that way. Maybe it doesn't have the concept of transactions that we were used to, where we can begin, do a whole bunch of work, and then at the end commit and do all or nothing. We've lost some of those principles. So at Twisp, where we first started, we knew, okay, to build a database that can scale up to any size, we know we need horizontally scalable underlying database that we can build on top of. From there, we started to look at the limitations of those underlying systems. Okay, how can we give those strong correctness guarantees on top of that database to provide this ledger service? And we made a lot of investment in what we call our transaction layer. And the transaction layer is a formally verified piece of code in our system that actually allows us to run those traditional types of transactions that we see in relational databases on top of a horizontally scalable data store. Now, when we start to think about how we scale to zero and serve any customer from startups all the way to the largest organizations, an interesting thing that we've seen is this trend of serverless inside of the cloud. And one of the key tenets of serverless, in my opinion, is that these systems scale to zero. And what scale to zero means, if I'm not using that system, meaning I have a very low volume on it, it shouldn't cost me anything. So when we think about designing and building Twisp on top of the cloud, using the cloud as our operating system, that's one of the big things that we want to try and inherit there is we want this system to scale to zero. If you're using a very small amount of resources, it should only cost a little bit. If you're using a massive amount of resources, obviously the system can scale up to do that as well. So one of the key engineering things that we were working toward is how do we provide this in that exact same fashion? So if you're a very small customer building a proof of concept, it's not going to cost you a whole lot. And that flies in the face of these traditional mainframes that we were talking about, where there's a huge upfront cost to even getting it up and running.
Having this flexibility is very counter to how a lot of financial infrastructure historically has been built, which is this gigantic, bridge project that requires enormous fixed investment. And creating that flexibility is really great because you can have much smaller players that come in and out and are able to experiment. The last question I've got for you is around kind of moving up the stack from the ledger and the data towards applications. And I know that some of what you do is financial workflows. And earlier in the conversation, you described, the types of services that would be built out, whether it's ACH or processing of some other type and so on. How do you think now, in your current permutation of these ideas, how do you think about financial workflows now, and how generalizable are they? Which ones are you seeing customers actually adopt? And, what's the implication of that for proprietary financial workflows if you can just package them into sort of on-demand financial infrastructure?
When we think about the workflow or the process of orchestrating the underlying ledger, usually where these requirements start to flow out from a customer is a financial service organization or Fintech org is starting to do more complex or sophisticated products. Maybe I have a card integration with Lithic or Marqeta. Maybe I'm doing ACH via JP Morgan or Scylla. Maybe I have a third-party bank that I'm then storing all those funds in with a whatever third-party bank that I chose. And I have these three disparate systems that I'm attempting to hook up together to serve a financial product. So when we think about the workflows themselves, we're asking ourselves the question, how do we start to orchestrate all this flow of financial data that's going through the system? And how am I giving myself a very clear picture inside of my ledger of exactly how all this accounting is working to make this flow? And that's really where workflows start to come in. As you start to bring more financial service products in, I need to pull this data in, I need to do that. And that's really where we focus on those workflow use cases. Now, as far as pre-building them, a number of providers have very clear APIs and interfaces of what it means to interact with them. I'll take Stripe as an example. Stripe has webhooks for almost all of their money movement products. So those webhooks are publishing data as transactions are actually occurring inside of the system. And there's this question of, how am I taking these JSON payloads that I'm maybe getting through a webhook, translating them down into a core ledger that's doing the underlying accounting? Those can be pre-built. And we actually go through the process. We have a number of pre-built workflows that can take a webhook from Stripe or Lithic or Marqeta or something like that and automatically map it down into my ledger. And now workflows become these building block pieces that I can use that makes it a little bit easier for me to take that external financial service data, these events that are occurring in external systems, and start to piece them together and build my internal system of record. Here's how my fintech org sees the finances that are flowing across all this. Here's how I surface it back up to my customers. So the ultimate vision for workflows is really, how do we start to coordinate some of these complex financial flows that are happening and give a really clear abstraction and easy way for engineering teams to be able to build that. So at their core, they have numbers that they're confident with.
Jared, this has been a really interesting conversation about, what it takes to actually spin up a modern financial institution and how to do it, what you need on the infrastructure side. If our audience wants to learn more about you or about Twisp, where should they go?
Yeah, twisp.com. We have docs up there. Please reach out. We have a contact us form on the site as well. We'd love to have our accounting engineers spend some time with you if you're having this problem, and we can help you really think about how to frame and think about moving forward through it.
Fantastic. Thanks again for joining me today.
Yeah, I really appreciate it.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things FinTech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.